And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Sonali Basak. We're counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast with Massar and Tim Stenovec. Welcome to our audiences across all of our Bloomberg platforms. That includes television, radio, and our partnership with YouTube. Happy Monday, Massar. I hope you had a good weekend because the market's doing well.
Yeah, I mean, the bulls are back in a big way. And you look at the major industry groups, we'll get into it later. But, you know, there's green across the screen. So we're seeing really a broad-based rally on this Monday. Very different tone than we've seen certainly on Friday, but really over the last 3 weeks.
Just a reminder of where we are, though, so far this month, so far this quarter. The S&P 500 is still down 4.74%. And also the NASDAQ composite down more than 5.7%.
It's interesting. I've been doing the same, taking stock of where we have been this year so far. And while you see a lot of those S&P gains coming from communications, tech stocks, you also see a lot of it coming from energy. So you really have the market telling you two things at once. One, that they're worried about kind of geopolitical risks and really pushing into that energy sector at a bigger scale, while also having some optimism around that technology sector where, again, the rules we've been talking about are being rewritten in terms of how those giants are willing to give that money back to investors.
Though it was interesting, one contrarian point to that was that note out of Jonathan Golub over at UBS, basically cutting to neutral his sector recommendation on those big 6 tech firms, basically the Mag 7 minus Tesla here. And he says, look, those longer term narratives on AI, et cetera, that's still in play, but he sees some difficult comps as well as some concerns here about cyclical forces that could actually slow some of that earnings momentum. We will find out in due time, about 24 hours from now, when Tesla kicks us off with those big tech earnings. Here on this day, though, a nice rebound from last week. They haven't recouped all those losses, but I think investors will take it. The Dow Jones Industrial Average up 250 points or 0.7%. The S&P 500 closing back above 5,000, up 43 points or 0.9%, while the NASDAQ is going to close out the day higher by about 1.1%. And the Russell 2000 and those cyclical stocks also getting in on the action. The Russell, the S&P 400 mid-caps, and Dow Transports each up 1% on the day.
All right, guys. So earlier I mentioned pretty broad-based. If you look at the S&P 500, almost all the names, 412 to the upside for the Monday trade. Sonali, 86 to the downside, 5 unchanged.
Let's look at the sectors here as well, because it's interesting. You are seeing outperformance here in information technology up about 1.3% on the day, and financials getting some love around 1.2% on the day. You're also watching materials really lag the group, but still in the green, only up about 0.2%. But again, broad-based gains today across the S&P.
All right, so let's get to some of the individual gainers. A fair amount to choose from, certainly, in today's session. Your number one gainer in the S&P 500, folks, is Ford Motor Company. That stock just finishing off its best levels of the session, so that's good for a gain of about 6.2%. What we saw is legacy automakers actually rallying in today's session, while some of the EV makers came under pressure following some news that Tesla is deciding again to cut prices, really slash them across their lineup over in China over the weekend. We saw GM also trading higher in today's session. Keep in mind that GM and Tesla both reporting tomorrow, and then you get Ford results on Wednesday. All right, another standout performer to the upside, NVIDIA. That went up 4.3%. It is the number 3 gainer in the S&P 500, number 2 gainer in the NASDAQ 100. SoftBank is investing 150 billion yen, or just under $1 billion US, by 2025 to boost its computing power for generative artificial intelligence. This is coming from the Nikkei. They didn't say how it obtained the information, but nonetheless, and despite that call from UBS cutting their sector recommendation on the big 6 technology names, that SoftBank news really giving a boost to shares of NVIDIA in today's session. And then here's a healthcare name, Guardian Health, up about 9.5%, so finishing just off its best levels of the session, rallying after the FDA scheduled May 23rd an advisory panel to review the company's Shield blood test for colorectal cancer screening. So that really gave a boost to that name in the Monday trade.
Does that thing work? I thought that was like the whole issue. Everybody was concerned that it doesn't necessarily have the efficacy.
They're going to do a test for an advisory panel, so it looks like they're making some progress there, Romaine.
Okay.
Yeah, we'll see.
All right, well, you got the gainers, Carol. I got the decliners. I do want to start with Tesla. We talked a little bit about them in our program earlier. I know you guys did as well. The worst performer in the S&P 500 on a points basis, down more than 3% today. A slew of headlines. The company cutting prices in China, Europe, and the U.S., this coming at a time of slumping sales, a glut of inventory. Also slashed the prices over the weekend on full self-driving, the auto software here in the U.S. Musk postponing a trip to India India, where he was expected to meet with the prime minister, saying had to deal with, quote, heavy obligations at Tesla. The company also, according to our reporting, and then confirmed by Elon Musk a little later today, slashing a newly formed marketing team. Check out today's big take. It's all about the chaos at Tesla. As you guys mentioned, the company reporting after the bell tomorrow. Down nearly 44% so far this year. Shares the lowest going all the way back to January of 2023. Let's take a look at what happened with Verizon today, down 4.7%. This after the company reported continued customer losses and lagging revenue. Free cash flow also falling short of analyst expectations. We should note the company did say that more people were choosing premium phone plans.
Premium, really? Did they talk at all about all the drop calls? I'm asking for a friend.
Okay, you are. The largest wireless carrier in the U.S.
Is that friend's name Romaine?
Informatica, the software company, shares finishing the down by 10.5%. The company coming out and saying it's not engaged in takeover talks following reports that discussions with Salesforce had cooled. Salesforce's takeover talks with Informatica cooled, with both parties struggling to agree to terms. That's according to a person familiar with the matter. Salesforce and the data management company Informatica had been unable to agree on a price. The person said, asking not to be identified, discussing confidential information. Nonetheless, shares falling 10.5% today.
All right, let's take a look at the yield space right now. Maturities across the curve, relatively little change, at least compared to the big swings that we saw last week. Your 2-year, 5-year, and your 10-year all slightly lower here on the day, but only by about a basis point. You did see a little bit more selling on the long end of the curve with the 20 and 30-year yields and 30-year treasuries, and that pushed yields on each of those issues up by just about a point. Carol.
All right, so as we get ready for a jam-packed week, certainly some big earnings, as we've all been talking about. We have kind of some record treasury auctions coming your way, an important inflation print. One of the stories that is among the most read, it was even a red sticky earlier in the day about what Goldman's doing. Remember, they've been for years really trying to tap into the kind of regular guy and gal, if you will, consumer market. Well, they're ditching their robo-investing and they're selling it to Betterment. But, you know, Tim, you and I talked about this earlier. I mean, this is something that they've been trying to do for years, but they've been kind of slowly unwinding that. It just hasn't quite, the consumer play, at least that is, played out how they thought it would.
Yeah, we don't have details on the amount of the sale, and you know, our own Srinatarajan arguing that it's not material to Goldman.
But isn't that kind of the key though? When you say it's not material,
yeah,
it shows you just how much this has failed.
Remember how big of a push they made into consumer banking over the last few years? They had the huge tech acquisition a few years ago that brought over, I think it was called Clarity Money years ago, and they've been spending years unwinding that.
Well, one big question that remains is they still have Marcus, and Marcus has those savings accounts, and recently they reduced the interest that they are paying out on those accounts for the first time.
I'm sorry, they reduced the interest?
They did, and so in anticipation of rate cuts, they cut their rate.
What do they know that we don't know?
Well, here's the thing. So if they don't have Marcus Invest and these other products drawing in consumers, then do they still get to bring in that money, which ultimately is to lower their cost of deposits for the firm?
So is this, I mean, Chanel, you cover this company, but is this kind of the end of that retail push, or is this just kind of maybe a reset?
Well, that's the thing. They still have Marcus, right? They don't have Marcus Invest, but they do have Marcus. And
but
so
how big is that right now, though?
Marcus, the actual, I mean, it's still quite sizable, right? I mean, they bring in a lot. Remember, they had the most competitive rate next to essentially SoFi and a few others in the market since the start of the rate hiking cycle. But does that continue without all of these other ancillary things?
Well, that's what I was going to ask you. And sorry, we're turning this into a let's ask Shanali a lot of questions. But why keep it, Shanali? What is it? Is it just that it brings in another round of kind of money that they can play with a little bit? Is that what it's all about?
It's not even playing with that money. It's the idea that it lowers their cost of deposits, right? I mean, that's kind of why these banking businesses are able to do so well by bringing in essentially stickier money, if you will. Remember, it's not just that they have money in savings accounts from Marcus. They have CDs that are locked up for some period of time. And so, again, do they keep that as a strategy ultimately to keep their costs lower? But
it's definitely a scaled-back strategy, right, in terms of kind of going after consumers. All right, guys, that's a wrap. Get ready for a really, really, really big week this week. It's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell, and we will see you again, same time, same place tomorrow.